Good morning, trading world. Excuse me. Trying to get over an illness this morning. Some type of cold, something. Today is February 15th, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. The title for today's outlook is Momentum Signals. First and foremost, I started as a technical analyst or chart trader before getting adept at quantitative and fundamental analysis. Because I started there, it gives me kind of, I wouldn't say unique, but it gives me a view of taking what I see on the quantitative and fundamental side and explaining it through simple chart concepts. Momentum is a big part of trading. And I know we've all probably heard or saw the concept comparing trading momentum to that of a ball rolling uphill. You know, we've kind of seen this explained a few times. Well, I'm going to give my concept of it, or my 2 cents on momentum and trading. If you roll a ball uphill, the initial force or momentum you rolled it with will allow it to roll uphill. Eventually, that initial force or momentum will exhaust and it will begin to slow down. The exhaustion of momentum is just the normal force of gravity slowing or working against the initial momentum. At some point, the initial push of momentum slows to a point where it becomes almost equal to the pull of gravity. Somewhere prior to this point, the ball may still be rolling uphill, but the revolutions slow down. When the pull of gravity becomes greater than the initial force of momentum, the ball reverses and rolls back down the hill. Let's focus on the moment right before the initial momentum is overtaken by the pull of gravity. The ball continues to roll up the hill, however, it has slowed down and the revolutions slow and slow until the point where it just can't make another revolution. Now let's compare that to the recent trend of closing prices going back to January. Now if we go back to mid or early January, and before I get into this, it's not going to be exact, but I hope it's not going to be exact or completely accurate depiction, but I hope you get the point as far as relating the ball rolling up the hill to trend and price action closing higher and higher each day. So now, going back to this point. Alright, going back to mid or early January as prices were in an uptrend, meaning we had close after close that continued to close one above the next, which is an uptrend. Higher highs, higher lows. And going back even further than that, the bounce, or where we started in December, as we pretty much hit what was then the floor, that bounce acts as the initial force or momentum for that roll getting started going uphill. So as we go, or as the ball is rolled uphill, we have price action close above the last, consecutive times, closing above. Like I said, it's not going to be complete accurate depiction, but hopefully you get the point of being in an uptrend. The ball being rolled uphill is compared to price action being in an uptrend. Starting in February, we see closing prices having trouble continuing the trend of higher close after higher close. And that's right here in the beginning of February. And that's price action starting to have trouble making those, or pretty much stop making that higher close after higher close. Instead, we see closings happening around the same place, not really making higher highs or lower lows in a meaningful consecutive series. This is the beginning of the pull of gravity starting to overtake the initial momentum of the ball going uphill. Now consider the last couple of days where the closing price has been almost identical. This is where the gravity pull begins to overtake the initial momentum, and even though the ball is still, or the ball may still be rolling uphill, the revolutions have slowed to where it could reverse at any moment now. Now, to completely understand this process is to understand that the market is a fractal, which means the same process is taking place in different phases, all at the same time in different time frames. You can track this process through closing prices, or as I do in my spreadsheet, I track it using the POC, or point of control, if you're familiar with volume profiles. I haven't updated my spreadsheet because it's manually, but it may be something I get to today. But if I bring in the spreadsheet, you can see this graph here is where I track the POC. I just haven't updated it for the more recent price action of the last week. But again, that may be something that I will try to get to today. So again, we've all heard, how momentum is likened to trading with the ball going up the hill. And this is just showing you via price action that momentum has pretty much dissipated from the market. And we're at that moment where the revolution is slowed so much that it's getting harder and harder to even make a full revolution, and that it could reverse at any moment. So keep that in mind, and keep it in mind that this is also happening at the same time in different phases through different time frames. That's a much more elaborate lesson. But I just wanted to bring that up to show that the moment is nearing. We're getting closer and closer. I talked about having a significant pullback somewhere between the end of February, beginning of March. And this is just to further that proof of how momentum is waning, leading us into that reversal. So with that being said, let's get to the key levels to watch for today. All right, here we are back with the key levels of the day. Starting on the resistance side, we have our jack resistance at the 411 to the 412 area, which will be really pertinent today, whether we can break through it or get a couple rejections off of it. Then we have our queen resistance area, 413 to the 414 area. And then our king resistance area, 415 to the 418 area. On the support side, we have our jack support, 410 to the 409 area. Queen support, 408 to the 407 area. And then our king support, 406 to the 405 area. The main thesis for today is bullish, closing above the 412.64 with a projected target high of between 412 and 418. The alternate thesis is bearish, closing below the 412.64 with a projected target low of between 411 and 405. The main channel we are in is from 397 up to 416. The main channel above where we're at is 416 up to 425. Now, yesterday, market strength and breadth gapped down on a hot CPI number, then quickly rocketed back up, only to come back down and establish a huge trading range that did not make it back up to the range high. I expect some continuation from yesterday to try to get back close to that range high and gap and flow that we left yesterday. Then continuing lower into the pullback that is building. We do have harmony between the technical side, which is bullish, and the quant side, which is bullish. And that harmony is almost small enough to kind of consider a 50-50 bias. So we got to be careful today. That today is not the day to get excited, because today is pretty much a nowhere day. We may, go up, go down, but we're going to return to pretty much unchanged on the day at some point, if not close there. So that brings us to the scenarios of the day. All right, here we are back with the scenarios of the day, starting with the most probable scenario. And forgive me just a moment, since I didn't do anything yesterday, I'm a little bit off. But today's most probable scenario is going to be our trend day down, meaning we open gap down and start with a push back toward the previous close represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the day. We usually find our midday chop around the possible queen or king support area. Not all the time, but a dependable amount of times. We usually come out the second half of the day on a trend day looking to continue the primary trend of the morning, which was down. It usually turns into a head fake, which means at some point we reverse and we get a rally of some type going into the close or before the close. Now, because of the environment that we're in, where momentum is waning, and we could get a bigger rally to kind of make that distance back up to get us closer to that previous close. Excuse me. So keep that in mind at the end of our trend day, if this does play out to be a trend day. Let's get to the next scenario. All right, our next scenario is going to be our expanded range day structure. We could have a small push higher first and begin to consolidate around the jack or queen resistance area. And that's the consolidation where we pretty much just trade sideways for a certain amount of time. Breaking that consolidation range to the lower side could be the beginning of a decent size pullback. So breaking off of the consolidation range today, it could show continuation worthiness into Thursday. So that is our expanded range day structure for today. All right, our last scenario is going to be our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area and find our midday chop around either the queen or king support before going back up with the same energy or force that we went down with the first part of the day. So that is our rounded reversal day type structure. I do want to give you a vice versa alert, because it is possible that we could make it, get a push lower off the retail sales number that would take us down pretty deep, and we could get a vice versa scenario that could see us push back up to start the day and find midday chop around either the jack or queen resistance area, and then go back down the latter part of the day with the same amount of force and momentum that we went up with the first part of the day. So that is the rounded reversal vice versa alert for today. As always, your most important job as a trader is to protect the capital that you already have. And we do this by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. I hope that helps. Hopefully you can go back and see the correlation between momentum signals, that ball rolling up the hill, and how the revolutions in the ball slows before it completely stops and reverses, and correlate that to the closing prices that we're having right now, or if you're like me, the POC numbers, as they stop gaining momentum up and kind of flatten out before reversing. So again, I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.